Hello, in this lecture we're going to record a transaction related to the accounts payable cycle, that transaction being the purchase of meals and entertainment on account. So here's going to be our owner, we're purchasing these meals and entertainment and we're not paying cash for it. In this case, we're giving an IOU. That IOU, of course, is the accounts payable. Now, I first like to think about what we are receiving, oftentimes it being easier to know whether we're going to debit and or credit what we are receiving, in this case being meals and entertainment. So if we go through our accounts here, we can see meals and entertainment being an expense account. All expense accounts have debit balances and they pretty much always go up in the debit direction. Therefore, we know we're going to debit the meals and entertainment account. Once we do that, we know that we're going to credit the other account that's going to be affected. That other account isn't cash because we didn't pay cash. It is, of course, the accounts payable that we talked about at the beginning. We now can see that we are going to credit the accounts payable, and we can think through that and see whether it makes sense. If we post this out, we're going to say that the meals and entertainment is going to go from 0 up in the debit direction by 1,500 to 1,500. The accounts payable, we can see, has a credit balance represented on the trial balance by the brackets in this case. And we're going to do the same thing to it, crediting it, meaning it's going to make it go up in the credit direction. So we have a credit going up in the credit direction. Does that make sense? It does, because the bad thing went up. We owe more money in terms of accounts payable of that liability account. How about the accounting equation? We can see that assets are going to remain the same. We can see that liabilities went up in this case. What happened to owner's equity? Went down. Why did it go down? Because expenses went up. Expenses bring net income down, calculated as revenue minus expenses, and that brings the entire blue area, including the owner's capital and the entire income statement, revenue, expenses, down.